Hey everyone! Welcome back to Wealth for You, where we break down big financial news into simple ideas. Today, we're diving into one of China's biggest tech giants, Alibaba, and why this could be one of the most powerful long-term investing opportunities right now, especially if you're a Singapore investor. From a $53 billion AI investment to its first-ever dividend payout, massive share buybacks, and a way for Singaporeans to invest easily through SGX SDRs. This is a story of a tech titan reinventing itself. So make sure you smash that like button, subscribe to Wealth for You, and stay till the end to see how you can benefit as an investor in this new Alibaba era. Quick disclaimer. This video is for educational purposes only. It's not financial advice. Please do your own research before making any investment decisions. Part 1. Setting the stage. The economic and political backdrop. Now, before we talk numbers, let's talk about the environment Alibaba is operating in. Just a few years ago, China's tech industry faced heavy regulatory crackdowns. Companies like Alibaba were under pressure. Investors were worried. Would the Chinese government shut down an entire sector overnight? But things have changed. Fast forward to today. The Chinese government is back in full support mode. Leaders like Xi Jinping and Jack Ma have made peace, and the tech sector is full steam ahead. Compare that to the United States, where policy uncertainty is once again escalating, especially with Trump's return to the White House. His latest move? A new round of aggressive tariffs, including 100% tariffs on Chinese electric vehicles. This kind of hardline stance has already caused economic strain in the past, pushing up prices, disrupting supply chains, and unsettling markets. If history repeats, we could be looking at higher inflation, slower trade, and more market volatility ahead. Part 2. Meet Alibaba and its core business. Let's rewind the clock to 1999. A former English teacher named Jack Ma had a crazy idea. He believed the internet would one day change the way people buy and sell, not just in China, but around the world. So, with a small team and big dreams, he launched Alibaba from his apartment in Hangzhou. Fast forward to today, Alibaba is often called the Amazon of China. But in truth, it's more than that. It's a digital empire with two core engines driving its growth. First, e-commerce. Think Taobao and Tmall. These are online marketplaces that connect millions of buyers and sellers every single day. Whether it's a student in Beijing buying skincare or a merchant in Guangzhou selling sneakers, these platforms are part of everyday life in China. Taobao is like a giant virtual flea market, while Tmall is the premium shopping mall for big brands. Second, cloud computing and AI. But behind all that shopping, there's another engine, Alibaba Cloud. Think of it as the brains and plumbing of the internet in Asia. It powers everything from websites and payment systems to smart city infrastructure. And now, it's evolving into something even bigger. The home for AI innovation. We're talking about powerful software that can think, learn, and even write, helping businesses operate smarter and faster. This dual structure, commerce on the surface and cloud plus AI in the back end, makes Alibaba a rare kind of tech company. It doesn't just sell to people, it also builds the tech that runs the internet. Part 3. The future. AI plus cloud focus. Now here's where it gets really exciting. The future of Alibaba lies in AI and cloud computing. But let's keep it simple. AI, or artificial intelligence, is basically smart software that learns from data. It helps businesses, and even governments, make faster, smarter decisions. From personalized shopping to automating logistics, AI is transforming how Alibaba operates. At the heart of this push is Alibaba's powerful AI foundation model called Qwen 2.5 Max. It's the engine behind many new applications, including writing assistants, intelligent customer service bots, and even music generation tools. As of early 2024, multiple derivative models based on Alibaba's Qwen technology had been built by developers around the world, showing strong global interest and adoption. And to support all this innovation, Alibaba has committed to investing RMB 380 billion, that's about 53 billion US dollars, into AI and cloud infrastructure over the next 3 years. That's more than their total investment in this area over the past decade, a clear signal that they're going all in on AI. Part 4. Latest financials. Is it healthy? All right, let's talk numbers. Because numbers don't lie. In fiscal year 2024, Alibaba generated a whopping 21.6 billion US dollars in free cash flow. What does that mean? Well, think of it as the money left over after paying all the bills. Rent, salaries, operations, everything. This is the cash Alibaba can use to reinvest in growth, reward shareholders, or build more AI infrastructure. And yes, it shows the business is still generating serious profits. On the cloud side, Alibaba's Cloud Intelligence Group, that's the arm responsible for AI and cloud services, saw 11% year-over-year revenue growth, even after excluding internal revenue from other Alibaba businesses. But here's what really stands out. Revenue from AI-related cloud products grew by triple digits for 6 quarters in a row. That's not a one-time spike. That's consistent, compounding demand from businesses who need powerful, scalable AI solutions. This tells us 2 things. First, AI and cloud are not just future bets, they're growing revenue streams today. Second, Alibaba isn't just surviving the tech race, it's gaining speed. Part 5. Shareholder Benefits. What's in it for you? For years, Alibaba focused on growth, reinvesting profits to build one of the world's largest e-commerce and cloud platforms. But in November 2023, the company made a major shift. For the first time ever, Alibaba declared an annual dividend for its fiscal year 2023. The payment, which was $1 per ADS, was distributed around January 2024 to eligible shareholders. It wasn't just about the money. For many long-term investors, it was a moment of recognition, a quiet nod that said, "Thank you for staying the course." And in May 2024, Alibaba proposed another dividend, this time for FY 2024, at $2 per ADS. Showing that this isn't a one-off gesture. It's a sign of confidence and maturity from a company that's still growing, but now also giving back. Alongside this, Alibaba also returned value through $12.5 billion in share buybacks over the fiscal year, reducing the total number of shares by 5.1%. That means each remaining share, including yours, has become a little more valuable. With a capital management committee now overseeing shareholder returns, Alibaba has made it clear dividends and buybacks are part of its long-term strategy, not just an afterthought. So if you're someone who values steady income on top of long-term growth potential, this could be a new chapter worth paying attention to. Part 6. For Singapore investors. How SDRs work. Let's bring this closer to home. If you're in Singapore, you don't need to jump through hoops to invest in Alibaba. You can do it right here on the SGX through something called a Singapore Depository Receipt, or SDR. It works just like a local version of Alibaba shares, bought and sold in Singapore dollars through your regular broker and linked directly to your CDP account. The SGX code is HBBD. That's the ticker to look for. And remember what we covered earlier. Alibaba has started paying real dividends, with the first declared in late 2023, and a bigger one proposed for FY 2024. As an SDR holder, you'll receive those dividends too, converted to SGD and credited to your account. minus a small processing fee. It's a simple, accessible way to get exposure to one of China's tech giants while staying in your local market. Whether you're focused on long-term growth, building passive income, or just diversifying globally, the Alibaba SDR HBBD might be a smart addition to your portfolio. Conclusion: Alibaba isn't just bouncing back. It's reinventing itself with AI at the center. With strong cash flow, rising profits, and policy support, it looks positioned for long-term growth. And now, with dividends and buybacks on the table, plus access via Singapore's SDR, it's easier than ever for investors to ride this wave. If you're thinking long-term, Alibaba might just be a ship worth boarding. If you found this helpful, hit the like button, subscribe to Wealth for You, and let me know in the comments. Do you see Alibaba as a long-term play? And are you investing through the Singapore SDR? See you in the next video.